Hello, my friends, the Libertarian Investor here, and I want to discuss the stock market and what's been going on of late. Of course, if you watch this channel, if you're a Libertarian investor, if you're a contrarian, you know that the stock market is a giant Ponzi scheme. And in fact, I'm not an investment advisor, so don't take this as financial advice. Take this as simply a friend talking to you, but I'd say get out completely from the stock market. And we've had videos in the past, and I'll link to the last video where I talked about this. Everyone says, well, the stock market always goes up. The S&P 500, the NASDAQ, they always over time go up. But is this true? I showed a graph a few months ago in our video we did about this, that of course if you price it in inflationary dollars, stocks do tend to go up. And there's something even to be said for this, because my good friend Gerald Peters, who runs a channel about investing, says that we should be optimistic and we should keep investing and we should have faith that the stock market always goes up. And this could be useful for people who choose their stocks. That's what we're going to talk about today. We're not investing in the market, so to speak. We're not following the trends that everyone else is following. We're choosing our stocks. But if you look at the market as a whole, these indexes, and you price it not in terms of inflationary dollars, but in terms of gold, you'll see that if you've invested, say, since 2000 in an index, perhaps in the SPY, you've actually lost money due to inflation. And this is not even mentioning the fact that the majority of corporations, guys, because we've talked about this on this channel before, and a lot of libertarians don't agree, but it is my, shall we say, theory, or it is my philosophy that the corporation itself is a negative entity. And the main reason for that is because it's tied into government. And so all of these corporations, especially the bigger they become, guys, they inflate their numbers. And one very important thing to realize here is that they approximate, or they chase, what I could call the maxim of mediocrity. Because the more people that you have, the more people you have to please, the more people you have to hire, that creates overhead where you have to have these layers of management. And what does middle management do? I've always, throughout my career and life in the corporate world, have seen middle management and even lower management as completely useless positions. And they're usually staffed by complete morons and completely servile individuals. And that's why you have a lot of mediocrity coming out of these corporations. And of course, these corporations do use accounting tricks to inflate their numbers, to lie in their numbers. And accounts will tell you, if you read How to Read a Financial Statement, which is a great book on accounting, it talks about all of the tricks these accountants use to inflate their numbers. Of course, the majority of investors don't have time to dig into these financial statements. So the point is, just prima facie, guys, the stock market is completely inflated. The values are inflated. It is a Ponzi scheme. And I would recommend that if you have retirement, and again, I'm not an investment advisor, so don't take this as investment advice. It's just a friend talking to another friend. I recommend you get completely out of the stock market. Now, that is to be contradistinguished from actually making your own investment picks, having your own thesis, and then investing in those stocks, and we'll talk about that here in a minute. But what I wanted to talk about is the vaunted IPOs that are coming up for these huge companies like SpaceX and like OpenAI. And of course, these companies are completely inflated, and they're making expenditures that I believe, and many analysts believe, are not going to justify themselves in the long term. Of course, we've talked about AI a lot on this channel. I do believe that AI is a great technology. It is a game changer, but it's not going to be as much of a game changer as they're saying it is. It's in the interest of all of these AI CEOs, including Sam Altman, including Elon Musk, to say that, well, AI is the greatest technology, since the Industrial Revolution and that all jobs are going to be replaced within a year. I saw some story in the news today saying that now a robot is going to completely take over all drive-through orders at McDonald's. Of course, we've heard this before. About 5-6 years ago, they were talking about this robot called Flippy that was going to be rolled out in every single Jack in the Box location and make all fast food workers' jobs irrelevant. It didn't happen. I don't think it's going to happen because, again, these AI tools, while they are great, they do not have human intuition. And one of the huge mistakes that a lot of companies have made of late is that they've laid off their people and they've replaced their whole customer service apparatus with AI. And as someone who works in the pharmaceutical industry and has dealt with a lot of these AI robots over the phone, I can tell you, they have no intuition and they're not the best option that you have for customer service. Of course, it is a good idea to streamline a lot of your processes with AI, but it will not replace humans. Another famous person who's been talking about this, the great investor Peter Schiff, who said that he utilizes AI in a lot of his processes, but he has not had to lay off anyone. And the thing about these layoffs is that a lot of companies are using AI to justify layoffs and to get rid of a lot of these middle management positions that, in my opinion, were completely useless in the first place. These were created, a lot of these positions were created by DEI, and so they had to have some excuse to lay people off. And a lot of people are now saying, well, we did what we were supposed to do, we went to college, and now AI is able to do what we were able to do and take care of our jobs. I think that's a good thing because there was never a rule that said you need to go to college and spend $200,000 and then get a job and work for a corporation for the rest of your life. That's not living, guys. And on this channel, we talk about another option of living where you live without a job and a boss and you're able to pursue your own happiness, not someone else's. So I think it's good that this whole illusion of having to go along with a heartless system, a soulless system, and then go and work for someone for the rest of your life is crashing. I think that's a good thing. But again, I don't think it justifies this massive investment. And we were talking about the layoffs. So a lot of companies are laying off a lot of their people and replacing them with AI, even though they know that the AI cannot fully take over for human spontaneity and human intuition. And they're doing this because the minute they lay people off, this is another problem with Wall Street, the stock goes up. And a lot of these officers of companies, owners, and high management own a lot of stocks, so they are making a lot of money by laying all these people off. And what are they doing with the money that they could have paid all of these people? They're pouring them into buying the infrastructure to implement AI. And I think the expenditure of this infrastructure is not justified, and that's why I would not touch these IPOs with a long stick. I've seen a lot of IPOs in my life. I've invested in a few of them, unfortunately, and all of them tend to crash just a little while after that offering has gone public. And there's a reason for this, because the investment bankers structure it in such a way that basically it is a rug pull. You get all this money from the bank and then you sell these shares. The company gets all that money and then the shares crash. So basically it's the small investor, the retail investor like us, who are left holding the bag. Again, I'm not an investment advisor. Keep that in mind. I cannot give investment advice, but as a friend, I'd advise you never to buy into any IPO, and especially do not buy in to these lame AI IPOs. SpaceX and Openai expected to go public. Just a little background on this. The moment retail money, guys, floods in, right as smart money starts quietly exiting, as I said, smart money's going to get out. That's when you're going to come in. Do not invest in these IPOs. If you look at AOL, Time Warner, Pets.com, and the Uber IPO, the most hyped IPO of a cycle, ladies and gentlemen, is almost never the entry. It's the exit for insiders. The insiders know all this, and they're going to be getting out of this as soon as this stuff hits market. Now, everyone's salivating, guys, over the OpenAI and SpaceX IPOs. Everyone's talking about it. If there's one thing I hope you learn from my channel, The Libertarian Investor, which could be called the Contrarian Investor, because we do not follow the crowd, guys. And again, there's no group that's going to say people who do not follow the crowd. We're independent, guys. We think for ourselves. And so anytime anything is hyped, you can almost bet, not all the time, but you can almost bet that it is prudent to do the opposite of whatever the majority is saying, guys. It's worked for me time and time again. Again, these IPOs are not opportunities. They're the ringing of the bell. I mean, the louder the hype, the closer to the top. Now, here's one of the main aspects as to why I think my thesis of AI is going to be borne out. AI CapEx. That's capital expenditure, guys. That's the expenditure that all of these companies are making on this AI infrastructure, these processors, the data centers. And return on investment is, of course, unproven at scale. There's no proof that all of this spending is going to yield a good return on investment. Why? Because it's never happened before. And if you read Warren Buffett and value investors, it's just common sense. If you're an investor, now venture capital is a different matter, but if you're an investor who's trying to primarily vouch for the security of your capital, then you want to invest in things that have a good track record of a few years. Microsoft, Google, and Meta have collectively spent hundreds of billions of dollars building infrastructure for products that haven't generated proportional revenue yet. The picks and shovels trade, NVIDIA is already priced for perfection, guys. So the price of NVIDIA has no margin of safety. It's assuming that everything has to be 100% what they predicted going forward. So any deviation from the projected numbers, guys, it's going to crash. And I believe that crash is coming soon. Any slowdown in data center orders, it's going to be a violent repricing for NVIDIA. OpenAI itself is burning cash at a staggering rate. An IPO of $300 billion valuation means retail investors are buying the bill for Sam Altman's ambitions. Basically, OpenAI is cash hemorrhaging. And of course, Chinese AI companies like DeepSeek are eating the lunch of OpenAI. They have better engineers, better math, and they have more efficient processors, guys. This is just a fact. SpaceX is a great business, but it's going to IPO at a valuation that's much larger than the justified investment. And again, as we've talked about many times on this channel, we've had interviews over a year ago with Jim Rogers, the great investor, about this AI bubble. And people say it's going to be different this time. AI is going to be completely different this time because it's a game-changing technology and it's going to replace all jobs. No one's going to have to work. And as Jim Rogers says, and all the great investors know, it's never different this time because investment doesn't change. Human nature doesn't really change. Accounting and the laws of economics do not change. We know this on this channel. We know this here on The Libertarian Investor. And it's a very interesting parallel that if you look at the internet bubble, the dot-com bubble of 2000, the exact same words were used. People were saying, well, people are never going to have to work again because we're going to be making so much money trading these computer stocks, trading these internet stocks, that nobody's going to have to work. It's going to be a revolutionary technology. We've even seen this more recently with the Bitcoin and cryptocurrency boom. People saying, well, people are only going to have to buy cryptocurrency. And I remember the one trader and economic commentator, who I can't remember his name now, who said we're in the banana zone, which means we're in a zone where Bitcoin and crypto is just going to go straight up. That was about a year ago when it was valued at about over 100,000. Now this gentleman, I cannot remember his name, but he made a video just recently saying, I'm sorry, I was wrong. Michael Saylor has sold, I think, 15 Bitcoin when he said before he would not sell. So I think, again, crypto is a more complex instrument, and I don't necessarily agree with everybody who says that crypto has zero value. It's definitely not gold. It's definitely not money. It could be a good trade, but the bubble has burst many times. What I'm trying to say is this story is repeated over and over again. Don't fall for the AI hype. Of course, AI is great technology. And one aspect that Mike Adams, the Health Ranger, pointed out, he's got a great show. If you look at the Health Ranger report, he talks about these things every day. He is an AI developer. I'm also working a lot with AI. Have some interesting projects that are going to be coming out that I'm going to inform you of. AI is a great technology, but it cannot replace humans. And there are a lot of latent capabilities in the AI, but you need to know how to prompt the AI and how to utilize the AI. Now, the majority of managers in these companies, guys, I'd hate to be rude, but the majority of managers in these companies, here's someone who's worked in corporate America for a long time, myself, they are complete morons, ladies and gentlemen. They're complete morons. They're just careerists. They're there for money. They're there just to follow the status quo. They have no independent thought. So when they roll out these AI programs, they are not able to implement them at the optimal rate. And there was a report that came out over just the last few weeks. Companies like Amazon and Microsoft, I believe, were rewarding people just for spending AI tokens. So a lot of these programmers set up some programs that just said burn through as many AI tokens as you can. And so companies were rewarding the highest volume of people who ran through AI tokens. They're saying, look how much money we spent. Well, we spent more. Idiotic things like this can only happen in a large corporation where, again, it takes time for results to catch up to action. So again, complete stupidity. They're rewarding people for spending money, whereas if you were at a small company like mine, we're going to reward people for spending the least money and coming up with the most clever processes that spend the least tokens, but these huge corporations were rewarding people for spending the most tokens, which is why I say again, get out of Wall Street, guys. The stock market is about to blow up financially. There is a bubble coming, and this AI bubble is about to burst. So again, that's good, because then the prices of these AI technologies, these processors and so forth, will become lower so that the rest of us, the intelligent people, can buy them, and we can start utilizing them intelligently, and we're going to utilize them pro-humanity, pro-liberty, pro-freedom, not so that people will lose their jobs, but so that you won't have to have a job and you can have more control over your time. And there are a lot of beautiful narratives that are developing along that vein. So just very quickly, guys, what am I investing in? Because I haven't come on in a long time. And as you know, I have my three major buckets. We're going to do more detailed videos on this. But the first bucket is, of course, my geopolitical investing and social arb bucket. These are huge bets. And I'm only going to be using the money that I can actually afford to lose. In fact, when I put money in this bucket, I kiss it goodbye, and it's what a lot of investors call other people's money. It's money that I got because I didn't, say, buy a Coke one day. I didn't buy a coffee that day. I saved money that I was going to spend anyway, so therefore to me it's like other people's money. And what I'll do in this is I'm going to find trends, either geopolitical trends or trends on the market, commercial trends, and I'm going to buy options in stocks that I think will be majorly affected by whatever trends are going on. And of course, we're going to announce it in this channel. I'm always looking for these opportunities, and I think that bucket's where I can lose it all, or I stand the most chance to gain a staggering amount, 10, 100 times what I put in, because we're going to be using options. We're going to be using that bucket sparingly. The next bucket I have is the swing trade bucket. We don't day trade here on the Libertarian Investor. Again, trader spells retard backwards. That's a funny little joke, and I made a video on that too. If you rearrange the letters of trader, it spells retard. Day trading is something some people may enjoy it. I do not enjoy sitting in front of my computer all day, getting out and entering these positions. What I do is swing trade, and my swing trades could last anywhere from a few days to a few months to a few years in some cases. That's where I'm going to be using the charts to find entry and exit points into these companies that I think could have a multiple of return. And I am in 2 companies in that bucket right now that I bought over the last 2 weeks. One of them is Gill. And Gill is Gildan Activewear. And just to make a long story short, they bought the company that produces underwear and socks, Hanes, in the US. And their stock went way down, I think from over $100 to below $55 over the last 2 weeks due to the tariffs of Trump. And they're setting up for a great business trajectory over the next few years. I believe that stock could rise $75, $85 to $100. I'm prepared to hold that until that thesis bears out. Right now, today, it was, last time I checked, was at $59.40. We bought it at about 57, so I'm now in the black on that stock. I'm planning to hold that. Again, I'm not going to tell you exactly how to enter into these positions, or if at all, because I'm not an advisor, but I will tell you what I'm doing, and perhaps you can feel inspired by knowing that. Also, Gill does pay a small dividend, so I'm going to be paid to hold that. The next stock that I just got into yesterday, guys, is Elf. And that is the makeup company, Elf. They crashed over the last few months due to Trump's tariffs. It is now at $55.60. I bought Elf at $49. It's now at $55.60. It has gone up. We made a lot of money on that stock already today. The implied volatility in this stock is 60%. It fluctuates like a madman, but I'm going to wait till it gets up to about 80 to 100, and I'm going to sell that. Again, this is a pure swing trade play. I believe we are well positioned. There are new offerings in September on this stock and over the rest of the year until early 2027. We'll do a video where we go into this in detail, but Elf has a bright future, and I believe it's a great swing trade. Those are the 2 stocks that I'm in right now. I'm not in the market, so to speak. I'm simply using companies that are in the market to generate me, hopefully, outsized returns. And then the third bucket that I want to talk about, my last bucket, is what I call my Warren Buffett bucket. These are value stocks. These are stocks where I've studied the financial reports over a number of years, and I can project that those stocks are going to grow steadily over the next few years, and I have to buy those stocks at a price that's fair value minus a certain margin of safety. So I'm confident when I go in that there's a high chance I'm going to gain on those stocks, and I'm looking for stocks with a good, steady, and increasing dividend, because the goal is to push all of the profits from the first 2 buckets into the third bucket and then start generating passive dividend income that can then finance a lifestyle living off dividends alone. That is the freedom sweet spot. That's the libertarian investor sweet spot. And then, of course, have funds to pursue opportunities whenever they come along, but not desperately seeking those opportunities. So that's what we're doing, guys. I just wanted to tell you what I was doing in the market. Beware of these IPOs. Beware of the AI bubble. And when that AI bubble crashes, we're probably going to have a lot of opportunities from the collateral damage that happens. And, of course, we will be watching this here on The Libertarian Investor as it goes down. Till very soon, guys. This is Javier with The Libertarian Investor. Thanks for watching. If you want more videos like this, subscribe to the channel, comment on the videos, like the videos, and I will see you very soon.